My name's Claire. I am the Senior Campaign Manager here at Birchal, and I'm delighted today to be joined by the Utopia Home team for their investor Q&A and webinar. I'd like to acknowledge the traditional owners of the country from where I am beaming in from, which is the Wurundjeri people of the Kulin Nation here in Melbourne, and I pay my respects to their elders past, present and future. I am, as I said, absolutely thrilled today to be joined by the Utopia Home team, Sam, Adam and VJ. Welcome so much to today's session.
Thanks, Claire, and hello, everyone. Thanks for joining us today. We're really excited to share with you the journey that we've been on so far, a little bit about our brand and, the mission that we're on that we hope you join us in. So maybe I'll kick off by giving you a little bit of a background on myself and the genesis of the business. But I've been in retail pretty much my entire working life. I started out as a buyer in the Woolworths Group. I moved from there over to Metcash, which is the IGA supermarket chain. I ended up running marketing and promotions for IGA. And then I took a massive turn and joined Startup Land. So I was headhunted by a startup that was right from the ground floor, so seed stage, and trying to move into sampling and market research in FMCG, and really fell in love with the ability to kind of build something new from scratch and bring something of value kind of into the world. So from that point, my career took a different path. I really went after roles where there was a big growth opportunity, where they were kind of digitally oriented, with a view that ultimately I wanted to be in a position to launch and build my own business and have that skill set. So I've done a number of turnarounds and new venture projects, ranging from the Co-op, where we tried to take this textbook business that had been around for 50 years and breathe life into it and turn it into like a cool student brand. That was a complete transformation of range, and grew their online business from 14 million to 30 million. I then joined and took it back to profitability. Joined the Winning Group, which owns Winning Appliances and Appliances Online, and launched their home clearance brand, which is now the third key brand in that stable. And it's also where I met VJ. So VJ ran all the tech that really fueled that kind of seconds marketplace at home clearance. And then I've been running e-commerce growth agencies, and part of that was being able to afford myself the flexibility and time to finally launch this business. And I'd always loved the category. What I loved about furniture is, like most Aussies, we love a beautiful home. But as a retailer, I viewed this as a really unique category, a little bit like fashion, where people shop based primarily on kind of fabric and design and style and vibe, and does it fit my living space? And it was very difficult to price compare products. So you'll see that fashion and furniture are unique in that there are many profitable retailers, whereas most other categories that are shopped by brand and product are duopolies in this country. So two really important things happened in 2017. One is that I was working at the Winning Group and really exposed to how different bulky goods retail is online to, I guess, traditional parcel-based retail, both in terms of, delivery. People can't have something kind of left out at the letterbox when it's a 45-kilo sideboard. Returns are a unique challenge in their own right. There's no reply paid parcels. So I saw this real opportunity to bring this kind of bulky goods challenge, the furniture category together. But I also moved from the inner city out to an acreage just on the outskirts of Sydney, which was two things. One is you get this real sense of nature. So we're surrounded by trees and green hills, and we live off rainwater. But the other piece was went from quite a small house to this like enormous country homestead, and trying to find furniture to fill it was a nightmare. So, our living area is like a Viking beer hall, and we literally couldn't find a lounge or dining table that fit. We went and bought the largest ones we could, and then ended up selling them on Gumtree, because in a conversation with the real estate agent, she mentioned that the previous owners were looking to sell theirs, and we bought them off them. So we also got this real sense of how hard it is through traditional retail to find the products that you want in a category where there's abundance of diversity. The challenge then is, how do I kind of discover the right piece? But then also for the new pieces we bought, you get really excited and you go out and find the perfect lounge to sit in your media room, and then you're told that it's kind of 3 months until it's going to be shipped. So this was really the motivation to set up Utopia Home. It was kind of in brainchild state for 12 months or so. And then we finally launched it a little over a year ago. But what we're trying to bring together is a place where you can find a wide selection of quality furniture across styles and budgets. That's really got an operating model that fits millennials' needs, which is kind of selection, individualism, and fast delivery, but also that has a real strong background as far as the social values go. And the thing that we think is often ignored in categories that are aspirational is they can sometimes have, kind of shadow attributes. And I think for this category, it's impossible to ignore the fact that, to produce timber furniture requires deforestation. And if you look at, certain players, I know there's a big chunk of, for example, IKEA's range that comes from unsustainable forests and is literally millions of hectares a year that get cut down. So, what we're trying to do is we find that, customers are actually very responsive to the uniqueness of, reclaimed wood and the kind of the beautiful original knots in them. But really to build a business that has maximum impact, we don't think we can kind of limit ourselves there. So we partnered in August with a business called One Tree Planted. And we now plant a tree for every order that comes into the business. So at the end of this month, that'll be over 3,600 trees planted. And if we look at it, over a year, we expect that we're planting over 20,000 trees. It feels really good. I'm making the donations, myself, and every time, I click that button, it feels great. So, maybe to kind of share a little bit of info on how we're doing that. Sam, if you just crack on to the slide.
Yeah, sure. So Utopia Home are building a better marketplace for the home. One that is better for customers through integrated customer service, delivery management, and enhanced content, and better for the environment through reforestation. Better for business as well, because we're controlling the pricing and gross margin, and we're capturing the value by owning the customer relationship. So why, Adam touched on this before, but why marketplace? Large selections, online platforms have a significant advantage for customers to find what is right for them through search functionality. They often have very specific requirements regarding size, color, and style. The whole reason Amazon started with books was because of the large selection and the category selection as well. But there is also business benefits to marketplace. We have zero inventory and capital constraints to our growth. Large ranges will cater for a larger audiences and versions. And we only develop. But it needs to be more than a marketplace. And we put this down to 3 key factors, and I'll go into these in more detail later on. But it's goods delivery.
I'm sorry, Sam, I'm having a challenge hearing you. I just want to check whether that's just me or whether everyone else is experiencing that also.
No, I'm also experiencing Sam cutting in and out. So maybe Adam or VJ.
Yeah.
Going.
Well, we've lost him. Maybe when Sam comes back, I'll take over running through the presentation. Thanks for raising that, Joe. I was wondering if it was just me. Okay.
We don't have Sam back. I can also share the slides from mine as well, and you can just let me know if you'd like me to keep going through them.
Yep. Why don't we do that?
Give me one moment.
You got me back here?
Yeah, you're still cutting in and out, mate. I think it's best if I just run through it. Have you got those handy, Claire, or did you want me to share my screen?
No, I've got mine handy. Give me one more moment. No.
We're up a little bit. There we go. Why don't we start there on Wire Marketplace? Okay, so Sam was touching on this, but we really feel that given the diversity of this category, the marketplace is the right model. It allows us to scale up inventory and new suppliers really quickly without the capital constraints that we would have if we were buying stock ourselves. So it allows us to increase that selection really rapidly. And we see, from our experience so far, a strong correlation between the selection and the revenue that we can generate as well. It's a limitless range, so we're only constrained by the amount of gross supply that's available in the market. Really, the market is made up of importers that are both wholesalers and retailers. We currently have 6 core suppliers. We've got about a dozen on our kind of immediate hit list, but we see the ability to scale up to at least dozens, if not well over 100 suppliers. Really dependent on how many we can kind of encourage to come onto the platform. We've got a dynamic inventory system, so all of our product data and inventory is connected to the suppliers and automated, which means that we know what's in stock. We've got automated order flow, and all of the products on the site are stocked in Australia. So it's not that it's being shipped from Asia or made to order. So our average delivery time is 4 to 5 days. Admittedly, in the last kind of 6 weeks with the delays of COVID, it's probably looking more like a 7-day average. But yeah, the days of kind of, ordering your lounge and then sitting on the camp chairs for several months are definitely long gone. And we don't think that that would really be conducive to selling to millennials, who make up about 65% of our business. And then critically, discovery of products. So vertical-based marketplaces have a distinct advantage because you can build all of your navigation and your filtering on category pages based around the sort of attributes that people want to search for in that specific vertical. And then this is really important. So, the historical marketplace model, I suppose, was like an eBay or a MyDeal, where there's lots of sellers and all you are is sort of the facilitator. And sometimes you integrate reviews to create like a trust element. But generally you leave all the customer service, the listings up to the sellers. And we don't think on our experience that would really work in this market. And it's because it has a couple of key attributes that are different. So the first and the most critical one is large bulky goods delivery. Is one, it takes a lot more coordination. But secondly, you need to be able to provide customer service, and not just an email that comes back in 48 hours. The combination of the requirement for coordination of any changes in availability of the customer and the high ticket price, which makes it a very emotional transaction, you've really got to be able to add that service layer. And a marketplace where you've got, potentially hundreds or thousands of sellers interacting directly with customers, it means we simply can't control that customer experience. The second point is there are already experience hurdles. And what you'll generally find on, say, a marketplace like eBay is the furniture is like fast furniture. It's very low price point. It's probably not the dining table that you expect to sit in your living room for the next 10 or 15 years. And skip to it. Okay. And so from that perspective, it's quite different. And we see that there are some opportunities for us to really start to address some of these hurdles for people buying their kind of quality furniture. And it differentiates by style and design rather than brand and product code. Okay. So we think this, as we said before, is better for customers, better for the environment, better for business. In terms of why it's better for customers, right off the bat, it's not just the delivery. A really key part of this is returns. part and parcel with bulky goods is that you get things like damage in transit, and you can't just send someone a return envelope to send it back. So it requires triangulation between the customer, ourselves, and the freight carrier to organise returns. They're also, more expensive. So if you think about the cost of shipping goods forward and back, you really need an intelligent logic sitting underneath the business in terms of how you kind of manage margin and shipping, and how much is absorbed and how much is passed on to the customer. But the complexity in this service makes it really unattractive to wholesalers, whose traditional model was having pallets on a truck going out to, say, a Harvey Norman or someone like that. Managing this B2C fulfillment is quite a complex thing in its own right. And we see this as something that, to succeed in any bulky goods category, it's essential. And we think the gold standard of this is appliances online. And that's really, I guess, from an experience perspective, the standard that we want to set for Utopia Home. So second is experience. So the downside of being driven by material and design is you kind of want to touch it. It's similar to fashion. You want to feel how thick is the fabric, what's the stitching like, how weighty is the product. And fashion has dealt with this primarily for returns. As I kind of mentioned in the previous slide, it's not as practical to be giving everyone a 90-day return window and expecting that 20% of the goods will come back. So we see this as being, yes, critical that there is a generous return policy. We currently offer 30-day change of mind returns. If it's purely change of mind, customer pays shipping. If anything is not as described or damaged, our suppliers or ourselves will foot the bill of shipping. But the key thing for us here is content. We just think that the content is the opportunity, and it's going through things like experience video content, where for the key selling lines and the high ticket prices, someone can actually see a video of someone reviewing and sitting on the lounge, but also augmented reality. So being able to visualize the item in your house. The other really important thing that we've identified is that lifestyle-based imagery converts and gets interaction at a much, much higher rate than your traditional white background e-commerce. But addressing this at scale is challenging. So it's not practical to have a photo shoot for 10,000 or 30,000 SKUs. So what we're doing is looking to introduce CGI rendered imagery for lifestyle imagery, so that we can start to create in situ product imagery across the broad range. And then there's also the critical of like economies of scale. Okay, and then finally, but equally important, is we believe it's just better for business. So one of the really key things is that it's differentiated by style and design. This is important because a lot of the things that you would do to improve customer experience, like creating customer-friendly product descriptions and product titles, also help to make products more challenging to compare with other retailers. You couldn't take an iPod and change or an iPad and change what it's called, but certainly, there's a whole bunch of synonyms people will use for lounge, and we can be guided by Google in terms of what the best way to kind of describe the products are. And because there's a relatively low digital kind of literacy level from many of the suppliers, you'll find that they may call something simply a dining table in reclaimed elm, where in fact what a customer wants to see, it's an 8-seater French provincial dining table in reclaimed elm. So we see this as being quite important. Brands are not a critical component of it, and the retailer is often seen as the pseudo manufacturer. So we see that already, is that when people buy products from you and leave reviews, they'll say Utopia Homes Furniture is good, because the standard in the industry, if you go to someone like Freedom or Fantastic, is that the furniture that's in their store is theirs. So there's quite a strong kind of stickiness component to this category in its own right.
Yeah, and therefore there's that opportunity to build that deeper relationship with the customer and capture the value.
You're crystal clear, Sam. You can take over again if you like.
Yeah, sure. So further to this, we control the other business benefits are that we control the pricing and margin of the products. in order to optimize outcomes. The unique content we will produce will have search marketing benefits, and owning more of the customer experience, be it through freight carrier selection or fast response times, is important in this category where many things can go wrong. Claire, next slide. So it's a combination of those three things that Adam was taking you through that require a different level of service than an ordinary marketplace can offer. Yet the marketplace model is the right model for the sector with an abundance of choice and specific requirements. So whilst our journey has only just begun, and we believe we have the right vision and model to develop a combined solution at scale. And we are better for the environment, as Adam touched on before. Our passion for beautiful furniture is matched by our love for the environment. Whilst we endeavour to focus our product range on reclaimed and recycled timber, providing beautiful, unique pieces for any house, in order to build scalable furniture business with a diverse enough range to service most Australians, we need to source a wide range of options, and not just a niche area of the market. And like our customers, we want to make sure that we are doing our part to restore the natural environment from which our furniture comes. This led us to our partnership with One Tree Planted, whereby we're helping reforestation, as Adam touched on before. And planting a tree is just the beginning of our environmental vision. So what about the competition? Some traditional bricks and mortar stores have business models not easily transitioned online, with their fixed cost structures, made to order supply chains and brand positions, or potentially holding them back from expanding their ranges online. For example, a brand positioned as cheap and functional wouldn't be able to sell a premium product online, nor would vice versa, as both would be in danger of damaging their brand positions they have built over many years. While our product range doesn't yet cover all price points, it is our intention to do so in the long run. eBay, whilst having an extensive range, has a platform that is often difficult to discover what is right for you with such a large range. Further, they don't have a consistent customer service, as this is left with the suppliers on their platform. And they also don't have specialized content because they wouldn't get the value benefits of doing so. In the online space, Temple & Webster are the biggest pure play furniture retailer in Australia with over 200,000 products, but they run a dual inventory model with their private label products contributing 26% of their sales in FY21. This model presents its challenges to operations and can have a heavy cost requirement. We have a focus on automation and staying independent, but in a category not differentiated by price alone, they are driving online adoption in the category, and the rising tide should hopefully lift all boats. So what of our team? Adam, as you may have picked up, is a highly skilled retailer with extensive experience in e-commerce. He's run digital marketing agencies and advises many businesses on this. VJ lives and breathes automation and is our chief problem solver, as we call him. VJ is also an expert in outsourced development, managing a budget to the nth degree. I have a strong background in strategy development, media, content, and strategic partnerships, with which we see a lot of potential. I have built businesses from foundation and had multiple CFO, CEO roles. I'm also a chartered accountant. So what have we achieved to date? We have had a strong start, achieving $3.3 million in revenue in our first 14 months. We launched operations in mid-August 2020, and the management team spent the first 12 months of operations developing automated systems, sourcing suppliers, improving the platform, experimenting with marketing, studying our customers' movements and purchasing pathways, learning about the logistics function. In short, we were building the foundations for the business, including a significant knowledge base, all while turning a small profit. But it is only just the beginning, and there is still a lot of initiatives to roll out. The refinement and learnings within our ecosystem have proven to be effective. They have enabled us to invest in customer acquisition, helping grow the business, and we have seen an accelerated growth in the last 2 months of trade, with both August and September trading at 50% and 39% above the previous month's records. Whilst COVID lockdowns have probably had some impact on this, Utopia Home has still experienced growth in months with limited lockdowns. And October is on track to be our strongest performing month on record, despite New South Wales lockdowns being lifted early in that month.
By the end of the day, it'll be our record month.
I think it already is. It's past it today. So where to next? There are many initiatives that we have to roll out in order to grow our revenues, improve our conversions, reduce our cost of acquisition, and improve our margins. And they require our focus and resources in order to achieve them. These initiatives include expanding our product range. We currently have 10,000 products. We have identified another 20 to 40,000 products we hope to onboard in the near term through various suppliers. Increasing our range should hopefully increase our revenue and conversions. Investing in content is key, and as we said, we are looking to develop out our capabilities to help improve conversions and overcome the experience hurdles. Improving our website is also important. Discovery is one of the key pillars, and as our product range grows, we need to ensure our ability to search it is seamless. And investing in customer service improvements. We see this as a critical function for the business's long-term value creation, and there are a number of gaps with the existing players within the market. So that's a short summary of the business today. We hope you enjoyed the presentation, and we're open to questions from here on in.
Glad you're on mute.
You're on mute, yeah.
I'm always on mute, probably the best place for me to be. So if anyone's got some questions, please pop them either in the chat or the Q&A box. But a first question that I've got for you is, how do you source new products, and what goes into that sort of criteria of working out what's next going to go in your store?
Yeah, so we kind of start by, getting onto online and looking at who's out there in the market. So we might pick a particular category that we're interested in that we think could use filling out, or we'll take a style or a category that's already performing well. So it might be over-indexing in sales compared to the breadth of range that we have. And then we'll literally reach out to them, tell them a bit of our story, generally quite receptive to the fact that, we've got a fair bit of traction early, and definitely the environmental message tends to resonate. We'll try to find someone who has some sort of either strength of range in reclaimed wood. So 3 of our suppliers, that's a core part of their offering. Or certainly on our near-term target list, there are a number that are either like eco-focused or say fair trade focused. So we like to see that there's some alignment in values around kind of the businesses as well. But we would then sort of put to them, our commercial terms, and then VJ would normally weave his magic on taking their XML files or their CSVs and kind of running them through our kind of middleware to automate the kind of mapping of fields and categories into our website. Once it sort of comes in, it's pretty well automated. So it automatically will take information from the product. So if it was a white timber dining table, it'll automatically get tagged as white and timber and be put in the dining table category. So that's kind of what the process would look like coming in. It's all local stock. It's very important to us that we can ship quickly. About 70% of our customer base is in the millennial generation. So we just don't think, long shipping timeframes really align well with what their needs are. And what we're looking to do is, think about how we translate some of the information about these suppliers, better into the store over time. So tagging them as being, whether they're FSC certified or reclaimed timber or fair trade. But yeah, that's kind of the process.
And you're mentioning in the slides about the Temple and Webster, there's a mixture of, in-house brands and brands from other suppliers on their site. Do you think it's in the roadmap for Utopia Home to create an in-house brand range in your future to take advantage of larger margins?
It's not on our imminent roadmap. However, depending on our ability to source, ranges of sustainable materials, we think there could be a really nice way that we tie that in to our brand and sort of bring unique products into the market in the long run. In the kind of near to midterm, we see this as potentially a friction point for Temple and Webster. I know that if you look at Woolworths, or if you look at consumer electronic retailers or Amazon, or even fashion retailers selling on The Iconic, they'll often say, they took my best-selling styles and then launched a private label of the same thing, and my sales have fallen off a cliff. So we see this as something that we can offer to a supplier that is kind of value add and agnostic rather than a frenemy.
Yeah. So just confirming that the suppliers on your site are advertising under their own brands or under the broader Utopia banner?
So we don't put the brands of the supplier up there at all. It's not generally how people would shop for furniture. They're not aware of brands. So they're unbranded products. What you will shop for is a table or a lounge of a particular material, design or style or size.
Yeah, this is part of the model, right? In that we form a deeper relationship and we're seen as the pseudo manufacturer. That's the opportunity to capture the value as owning the customer relationship.
Yeah, got it. And a few questions about some other aspects of the business as well. Two questions have come through about your content creation piece and also about your transport. So in terms of freight and freighting these products around Australia, do you take a margin in the freight, or is that a cost neutral exercise?
We don't take a margin on the freight. It's cost neutral. It's essentially measured up against the margin that we make. So what we would do is take our shipping table and look at the margin we have on the product and try as far as possible to absorb as much freight as we can while hitting our minimum margin requirement. The reason we do that is as much as it's counterintuitive, a lot of the time a customer would rather a $99 product with free shipping than a $90 product with $7.50 shipping. It's just a psychological barrier. We know it's a huge driver of conversion. So it's all part of the logic that we've built into how we kind of manage pricing and margins.
Yeah, it's another important factor of us being able to control the overall product offering in order to optimize the outcome of sales.
And maybe that's a good point, just back on Gundip's question around, are we exposing suppliers to the customer? And the answer is no. So really, we're a marketplace on the back end, and on the front end to the customer, we want them to feel the experience of dealing with a retail brand, because we see that customer service and control of last mile as being really critical in the category. And that's part of the service layer component that we're trying to manage. And we don't want duplicate listings. You go on eBay and there could be 15 listings for the same laptop with different descriptions. We just think that's a really challenging experience, and it's quite confusing for customers. So we're curating and controlling what actually gets presented to the customer.
Speaking about what customers see and how it's presented, you're mentioning, a real investment into content and CGI imagery. This particular question is asked about stats around 3D renders versus lifestyle pics versus, in real photos. How have you found in the website so far the conversions have been between the two? Are you testing both at the same time, or have you decided to go with one strategy to begin with?
Yeah, look, we've got quite a mixed bag in there. And to be clear, at the moment, we're not doing any of the CGI imagery ourselves. So if it comes in situ, it's because the supplier has it. And likewise, if it's kind of a white background, it's because the supplier has it. I would need to come back on the exact stats. They definitely convert at a higher rate. The other thing that is a really interesting lead indicator is if we go into our Pinterest marketing channel, all of our highest pinned and highest impression products are in situ.
Yeah, okay. And I'm really interested to know more about that, and especially your competitive landscape with a company like Temple & Webster. So a question came through a bit earlier about this dual inventory model that you were touching upon before. So you touched upon this dual inventory, can't pronounce it, inventory model having its challenges. I'm not really in this industry. I'm not really in this space. Can you elaborate on why that is challenging to have dual inventory models?
Yeah, so the first one is more supplier relationship related. So it starts to become more and more challenging as you cannibalize your existing supplier's business. And in the short term, that's probably okay. But what it likely looks like over time is if you keep bringing more and more of the range in-house. I think if you look over the last 3 years, they went from, I think, 16% private label to 20 to 26. It's growing quite rapidly. But it now means that you're carrying stock for all the goods on your site. And if you start thinking it like extrapolating that out, you end up in a very working capital intensive business model. I think Sam said there's 21 million of inventory on hold on average at any given time now. So if you think if they double that or triple that, it's likely to grow at the same rate. So yeah, it's a fundamental change to the business model of marketplace.
Yeah, it requires a lot more complexity in the management and delivery of that product, right? You've got to be sourcing it from overseas. It requires a bit more complexity. And we see that the fastest way to grow in this space is through a marketplace model and focusing our energy on automation of everything within our functionality so that we can rapidly grow within the market.
So if someone's buying more than one item on your site from different suppliers, for the customer, they don't see anything different, but in the back end, as you're mentioning, there's different suppliers providing the products. Are those shipping costs combined, or is that separate, or how does that tend to work?
The simple answer to that is if there's multiple items coming from one supplier, they'll be combined. But if it's a split order, so if, let's say you order 2 items and they come from 2 different suppliers, they wouldn't be combined because we may have one supplier shipping from Brisbane and another supplier shipping from Sydney. So they would come separately and you would be notified. So you would get fulfillment notification for each item and tracking information for each item so that like you're aware of that and there's expectations around the fulfillment.
Yeah, and look, I guess what that is indicating is perhaps a cross-docking model. But when you're talking about large bulky goods delivery, they're large items, right? So a cross-docking model isn't as there's not as many economic benefits through a cross-docking model.
For clarity, cross-docking is when you bring items in, you don't put them in storage and you ship them off your dock. So in that instance, you might get the order from the Sydney supplier, Brisbane, consolidate them and send them. But because of the cubic size of the goods, we'd probably pay essentially shipping twice. So it would become more cost prohibitive. But also it would delay, you're now kind of shipping from Sydney out to wherever. So you'd probably put another 3 or 4 days on the shipping lead time. So in certain categories, it makes a lot of sense. We've kind of discussed it, and it's not something that we feel is like either beneficial to us from a cost perspective or beneficial for the customer experience.
A question's also come through about revenue streams. So, you guys are a tech platform, we're a tech platform as well. We know what it's like in terms of different revenue streams coming into the business. A question's come through about whether your customer data will become a revenue stream as you grow, and if so, how, or if not, if there are other revenue streams that Utopia Home's considering.
So the first part of that is that kind of in our nascent stage, we haven't given too much thought or discussion to that. I can say that we will definitely monetize it within our own supplier ecosystem, whether that's through like targeted marketing opportunities, marketing packages and rebates, whereby, we can say to a cushion supplier that, they can, serve at the, an upsell or a targeted email campaign to people who bought a couch. We can also run sponsored. We can kind of control the weighting of products on collection pages or on search pages. And part of what we're looking to do in this next roadmap is create a personalized dynamic experience for customers, so that based on their shopping behavior or previous purchase behavior, if they're known, they will have a totally different experience in search results and category pages. So in that instance, we can actually start to influence in that. So same example, hey, this person's browsing lounges or previously bought a lounge. We can serve that supplier's brand at the top of any search listing for cushions, or it might be the lounge supplier. And when someone's searching for lounges, we start putting sponsored content up the top. In terms of sharing it with third parties, there may be instances where it makes sense and it's not risky. But my initial thought there is, we'd be really careful about sharing the data with third parties, and we'd want to take like a long-term view of who we were sharing it with and what the potential boomerang effect was going to be.
And on that, another really interesting question about your customer relationship that's come through is, you've got this really great return policy that you're mentioning during the deck, and all the CGI and content you put there. So the idea is that as many people as possible, when they get the thing, they know it's going to fit and going to look right. Questions come through about warranties for materials and repairs. The questions coming through, how does Utopia Home handle warranties and repairs for stuff that may be damaged or may break down within 6 months to a year's time?
So it's a good question, and there's the now question and there's the kind of pipeline question. So the now question is that all of our suppliers have at least a 12-month warranty. So for issues relating to like goods that are already damaged or defective, or they don't last long enough to really be classified as wear and tear, our suppliers will ultimately foot the bill for that. We're kind of the customer service point, so we'll manage that whole process for the customer, so they're not ringing around a whole bunch of suppliers. We do see an opportunity around a customer care plan where potentially we have a upsell at checkout that might be things like extended return periods. It might be repairs. So it's not something that's fully fleshed out, but definitely something that we're interested in implementing down the track. And then the final one, which is not quite directly related to that question, but while I'm riffing on it and thinking of it, is we're also interested in, for any items that require assembly, being able to, whether it's partnering and integrating with an Airtasker or someone like that, looking down the track at how we start to offer value-added services around assembly and installation.
Yeah, fantastic. And I'm interested, you're mentioning that you're targeting the millennial market. You've had great growth, with the initial capital that you popped into the business, and millions of dollars to date, which is really, really exciting. I'm really interested to know a little bit more about your market performance to date. I mean, obviously it's gone well because you're getting lots of sales, which is fantastic. But has that really kicked off very recently? I mean, congratulations on having your best month ever. But what really was that point in the business that flipped?
Yeah, I think maybe I'll answer the marketing story and then talk about some of those inflection points. So actually, we started with a $50 a day budget, and I wanted to keep a lid on our excitement. So I said to the guys, look, we might be lucky to get an order a day for the first few weeks, and the $50 was translating to $1,200 or $1,500 in sales. So the funds that we initially put in were actually to fulfill orders immediately. We didn't want to have to wait for funds to get settled. And then the business scaled up quite rapidly from there. It's really funded its own growth. It's not necessarily that it's easy to do. It's more that I've had the fortune of running e-commerce growth consultancies and agencies. So we kind of came in with an initial playbook of, we know these campaign types are going to be really successful on Google. We know these campaign types of these audiences are likely to be successful on Facebook. And then we've progressively kind of built out like the complexity of our campaigns on each platform. So, we've got Google, we've got Facebook, which have been driving the business. Google was probably the first 4 months. And then at the start of this calendar year, Facebook became a key channel. We've only just launched Pinterest. Our cost per acquisition is about $30. It's been pretty stable right from the start. We definitely took a period around kind of April and May, where we started writing a lot of logic around pricing and margin control, because the challenge with bringing in feeds of products with varying margins is it's very difficult to control what's selling at any given time. So now we've got configurable pricing rules, which allow us to set different pricing and minimum margins based on like categories, price ranges, and competitor activity in some instances. And that was kind of really nutted out over that, April, May, early June period. And from there, we started increasing our acquisition spend. So July really started to kick, and then we increased it again in August. So we went from sort of averaging, 220,000 ish every month to now consistently in that kind of 400,000 to 500,000 range. Now I think, as Sam mentioned earlier, October will be the record. So the interesting thing is that it's all been paid marketing. Because we're so young, you don't really get the benefit of SEO. And to be upfront, because we've been bootstrapping, we've been investing back into scaling via paid. So one of the really key things that we are looking to implement after this raise is, in addition to the content, is a strong technical SEO program. It's a category with it's really good for SEO because people use so many different synonyms like couch, sofa, lounge, likewise for colors and materials. So there's a big long tail, and all of the traffic that comes in from SEO, we make the entire margin. We don't have to deduct our marketing costs from it, and it becomes a fixed cost rather than a variable cost. So that's a really key thing that we want to get out of this. So we expect that over time, the paid marketing CPA will probably increase. It just tends to with as you scale up, but we expect that to be offset or more by actually starting to grow the free channels, the SEO and the organic traffic.
Yeah, fantastic.
And just to give you some context into the margins and how we've been operating, it's our gross margins around the 17 to 18% at the moment, because introductory, we weren't a name to begin with, so we had to, the deals we negotiated earlier on weren't as attractive as what we can negotiate now. But also as far as the costs, as far as marketing and cost of acquisition and all those elements, those variable cost elements, we have a margin of between 5 and 8%.
Yeah, wow. And the business is run by you three, and that, because this is the thing I'm thinking about, your fantastic growth and getting all the products on board, negotiating these contracts, fulfilling orders. Who else helps run Utopia Home behind the scenes?
So at the moment, it's principally been the three of us, and VJ's been the only one full time in the business. So Sam and I have been allocating some of our time. Sitting with VJ is a team of contractors on customer service. So we've got 3 people helping out there. As we mentioned, it's like a critical part of really what we want to deliver as a brand. And there's also contractors who have been helping us out on the dev work. VJ's background is software delivery and Scrum Master, so he aptly leads that. And he I won't say begrudgingly, but he's stepped in to run our customer service team. But another thing that we would like to do after the raise is bring in, not that we don't love VJ's phone manner, but we'd like to bring in a experienced customer experience team leader to come in and take control of that, and over time build out that customer service team to be solely in-house.
Yeah, awesome. And I'm interested to know equity crowdfunding. It's a question I like to ask every company. There's really great pros to running an equity crowdfunding campaign. So what drew Utopia Home to a public offering? Well, not a public offering because it's not public, it's a private company, but you know what I mean, out to the broader market.
Yeah, so we thought that we discussed this a fair bit, and we felt that for B2C brands where general investors, retail investors out there would be able to understand the proposition, because typically you can look at a business and say, that makes sense, I understand it, and I would buy from them. We thought that was quite attractive. We also know that most people understand the benefits of marketplace businesses and the virtuous cycle that tends to come on, i.e. as it grows, it becomes more attractive to suppliers, and your selection grows and it becomes more attractive to customers, and that flywheel tends to allow the businesses, once they really grab hold, to grow quite rapidly. And then additionally, within our networks, we've got family and friends and people in our professional network that have been quite eager to invest. And we felt this was a great way to be able to open up to retail investors and high net worths, as well as, our own networks.
Fantastic. I've got one more question from the crowd, and then I might pop into the investment process on Virtual as a nice segue. You're talking about the reason why you're raising funds, great growth and those 4 initiatives you outlined. I know this information will be available in the offer document, but on a really high level, proportionally, where are you looking to focus most of the funds raised first?
Okay, I think the allocation of funds is going to go towards the website development, customer service enhancements, building out the team. So what building out the team means is bringing on both Adam and myself full time to focus on business development. So there's a lot of opportunity in trying to secure new suppliers, and then content is the other one, and logistics enhancements. They're the 4 key pillars on what we're going to work on.
Yeah, fantastic. Well, I might hop into the final question before we hop into this, but I will be able to, talk a little bit more to this in my next little part. Interested to know who's behind the business. We've mentioned there's 3 of you running it day to day, existing shareholders in the business. Is it the 3 of you, or do you have other parties? Obviously, I understand you probably can't name them, but who else is sort of involved in the business behind the back end on a higher level?
Just the 3 of us at the moment.
Yeah, awesome.
That's partly, and this is probably different to your typical virtual funding round, is that Adam and I have large networks that we've developed over time, and there was a bunch of investors that were interested in coming in, and virtual seemed like a good opportunity for us to be able to bring together a bunch of investors.
Yeah, and that's what these platforms are for, a framework in order to provide a window of opportunity for those who are around the brand to take advantage of that investment. Fantastic. Which leads me and segues me really nicely into how Virtual works and what to expect next for those who are tuning into the webinar. So Virtual platform at the moment, we're in the expression of interest phase for the Utopia Home campaign. If you've expressed your interest, fantastic. You're going to be one of the first to know when their offer goes live, and you'll also be one of the first to receive a draft of the offer document in the days before the offer goes live as well, which you can have a look through and also ask the Utopia team any questions you might have ahead of them going live. But if you haven't expressed interest and you're just tuning into this webinar, then make sure you don't miss out, and please head to their Virtual page and pop your name down. When you get to the offer stage of this campaign, which is the next phase, which is looking to open up late next week, potentially early the week after, but we're aiming for later next week just to get all the T's crossed and the I's dotted, you'll have access to the company constitution, a subscription agreement, and also the offer document of Utopia Home. The information that will be in the offer document will include a history of the business, those who are involved, traction to date, the most recently completed 12 months of financial statements, statements of changes in equity, the cap table structure as well, the rights associated with your shares, use of funds, and the key risks outlined with this business and where Utopia hopes to grow in the future. One of the real quirks of the crowdsource funding regime and the regulations that we operate under as a licensed intermediary is that companies using this platform can't talk about financial projections, any speculative statements. They are not allowed to say, and in 5 years we'll make another $5 million. It is one of the quirks of raising capital under a crowdsource funded round. So I do endeavour you to please read the offer document, have a look at the traction to date of the company and their plans for growth. And I know that the Utopia Home team will be more than happy to answer any questions you might have and have those investor discussions ahead of their round opening. To actually invest through Virtual, once you get that SMS and email saying that the round is open, you head to the Virtual site for Utopia Home and you complete what is a 5-step investment application. So you will need to have a form of ID. And if you've got further questions about that, let us know. But a form of ID so we can identity check you. You need to read the offer document and confirm that you have read the terms and conditions before making your investment. Head through that process, basically pop in your details and how much you'd like to invest, hit submit, and you are done. Processing your payments for those who invest in what we call the private opportunity of this deal, which is usually running for about 48 hours, we will not collect your payment until the end of the campaign. However, if you delay and you invest and the company has already passed their minimum target, then we begin to process the payment for your investment pretty much ASAP. So once the campaign is complete and we have processed all the payments for your investments, you will be receiving a share certificate from the Utopia Home registry provider of their choice. And that is, the process. You'll get your share certificate. Utopia Home will get the money for your investment. They'll raise the amount that they're looking to raise, which we'll talk about in a sec. And then we can go from there, which is really, really exciting. So if you do have any questions about how to invest on Virtual and how it all works, please reach out to support@virtual.com. We've got a little chatbot on our site, and I'll probably be there to pick it up, or just flick us an email and we'll be able to help you from there. But the final question, guys, you've got a great, story. It's fantastic to hear about the success to date. It's really exciting to hear about, what you plan to do with funds raised. Tell me, what is the minimum you're looking to raise, and what would you want to raise in a perfect world?
Look, the minimum we're looking to raise is around $200,000, and in a perfect world, the maximum that we're going to raise in this round is $500,000. So we see there's an opportunity here to develop on a lot of our initiatives, and we don't. And as we've touched on, we are kind of cash flow positive on the growth metrics. So we feel that there's 500,000 is certainly enough for us to get us through to the next 12 months.
Yeah, fantastic. Well, I might wrap up the session there. For all information in terms of share price, amount of equity given away, all the financial details you need to know about this raise, please make sure you have expressed interest so you can receive a draft of the offer document before the offer goes live, because we can't reveal those details to you in this webinar. But guys, thank you so much for joining me today, and thank you to everyone who attended. Some really great questions came through, a really interesting take on the marketplace model. And I'll pass over to the Utopia Home team to sort of sign us off with any final comments.
Yeah, just on, I saw another question on valuation. The valuation that we're going to have is $10 million on the business. So you can back solve as to what the 500 works out to be. That's pre-money. Sorry, go out.
But yeah. Otherwise, thanks for taking that one, Sam. But yeah, look, thank you everyone for giving us your time. We're really kind of proud of the results that we've had to date. But as Sam said, our capital requirements at this stage probably aren't the same as a business that's in a cash burn state. We've got a positive variable margin. A lot of the things that we're implementing we see as being both accretive not only to sales, but being able to increase our margin as well. So we think, the growth that we get will contribute to being able to help us scale. But yeah, look, thanks for hearing the story. We're really passionate about the category and the business and, the mission as far as reforestation goes. The draft offer document will come out shortly. And once it's kind of live in the wild, we're happy to kind of pick up any other questions with you as well.
Awesome. Thank you everyone for attending. Thanks Utopia Home team, and everyone have a wonderful day. We'll be sending the recording of this session out a little later on. Thanks so much.
See you later.
Bye.
Thank you.